Hey, what's happening, guys? Dan Darrow here from Options and Play. Today, I'm going to talk to you about debit stops. All right, this is different than technical stops, which you would probably normally see on a stock, right? If you guys trade equity, you used to stop limits. So if it hits like a certain price, the position's closed, right? Um, Option trades, some platforms, actually probably most platforms, don't allow you to have stop limits. Okay, you might have like a daily loss limit for your overall account value, but you probably don't have the ability to put in stop losses for an individual position. Okay, so normally the way I handle stops when it comes to an options trade is that I view it kind of similar to a stock. So if I'm long a stock and I say like if it breaks below a certain price, then that trade probably no longer the bias or the thesis no longer stands, right? If I'm long and I think if it loses support, it's no longer a good long, then I want to be out of the option position, right? Or the call position or the call spread, whatever it is, right? Um, but what you'll notice is that during periods of greater volatility, we can burn through levels really quick, and more specifically, we can get these really substantial gaps overnight where you perhaps wanted to get out a certain level, but by the time the market opens, so materially past it, whether it's above it or beyond, right, that it doesn't really give you an opportunity to close at the price you want it, right? So what I like to do when volatility is higher is what you'll notice is that I use debit stops. I talk about debit stops, and it really simple. A debit stop just means that I'll talk about Broadcom here as an example, right? So say like hypothetically long a call on Broadcom, right? And say it's like a call that you paid like $3 for, right? And you're saying that if it really breaks below the 100A or the 200A, so let's say if it breaks below the 100A, I don't want to be involved, right? Like the stock will have lost key support from this year, and I don't want to be involved. Well, Monday had a huge gap below the 100A, and by the time it opened, it was already in like the low 290s, so it was basically 12, 13 points underneath that level, right? Now, normally, right, like the stock, like you take the hit, right, or whatever it is, you can close out the thing. But what I like to do is debit stops. So meaning that like I'd say like I in this type of environment, I like to give maybe like 40 to 50% of the overall debit of the trade. So again, if like hypothetically, if the call costs 3, then I would risk like $1.50, possibly even like a $1.60, right? Basically saying like if it lost that, then I'd be out. So kind of like moving away from the levels specifically, just because we tend to get these wider ranging bars, we get these big gaps. So instead of like focusing like on a specific level as a stop, I'm focusing more on the net debit level. So if the overall position lost 40% of its value, if it lost 50% of its value or 60% of its value, so like the net debit moves down to 50 to 40% of the overall total, then that would be my stop. Versus like trying to like pinpoint a specific level with like the stocks kind of gapping everywhere, huge ranges, a lot of volatility. All right. So this is something that you'll notice I like to do more in like these higher overall volatility environments, and I just find that it helps me kind of like it kind of helps me maybe like stay with certain ideas. When you have like 1,000 point days, 1,000 point up days, 1,000 point down days. This is kind of like a way I can go about sticking with ideas maybe a little bit longer, because I'm focused less on like individual levels and more on like the overall debit of the trade. All right. So if you like these videos and you're looking for more information on options trading or more option trade ideas, please follow up with the link in the description of the video for more information on options and play. All right. Have a great night, and I will talk to you all soon.